Welcome to another great podcast. This is Satavisa. For today's podcast, we have with us Ujjwal Jain, the CEO and founder of WealthDesk. Hello, Ujjwal. Welcome to Analytics Insight. It's great to have you here.
Hey Satavisa, thank you. Thanks for hosting me in this podcast. Look forward to some great conversation with you.
Thank you. Now, can you please tell us a little bit about WealthDesk and its offerings, and where did this idea of the company came from?
Yeah, so let me explain in two ways. Like one from an purely from an end customer point of view, another because it's a B2C platform technology business. The how we fit into the like the current capital market ecosystem. So coming from an end customer point of view, what we offer is that when you when you log in into your broking account where you are looking to invest in direct stocks and ETFs in Indian stock exchanges, you tend to invest on stocks basis some research you read or you got some advice from somebody, or maybe basis your information understanding, and then you go ahead and invest in it, and over a period you exit that stock basis your understanding that this is the right price to exit. But most of the time it happens that the people who open their broking account and or exit invest in direct stocks and direct equities and ETFs, they tend to actually not follow the strategy right in terms of when to actually enter and even when to exit. Even entering into a stock is easy, exiting is very difficult. So what happens over a period, most of the broking customers end up having investments in their portfolio which has many losers and limited winners because they exit at the wrong time. So what happens is, if you look at Indian stock market, though we have the number of broking accounts have been increasing very aggressively. Like we have a very significant growth in terms of number of demand accounts and people investing in direct stocks and ETFs. But uh, there's no there's no solution available to retail investors that so that their investment becomes smarter when it comes to direct stocks and ETF. So for example, when you invest in a mutual fund, there's a fund manager who's managing that mutual fund. You invest in that, depending on the mutual fund scheme, you're investing in large cap, small cap, or some specific themes, or anything that a mutual fund has provided you as an investor. But when it comes to direct stocks, uh, there's no way to actually invest in a portfolio. Let's say you want to invest in some specific sector like pharma, or some theme around electric vehicles or MNC companies. So what Welldesk does is that on one side it brings some of the most recognized SEBI licensed professionals who actually have the understanding and the profile and the pedigree to actually create portfolios as an advisor, as a research analyst. Uh, and on the broking platform, what we do is we make these portfolios available to you as a retail investor. So what happens is that instead of direct stock investing basis your understanding, you invest in these portfolios. And when you invest in these portfolios, the underlying stocks in these portfolios, there are some weightages around which these portfolios are constructed. So basis your investment amount, these you a split comes in at which stock you need to buy, how much, and all that. And through your same broking account, you execute those trades, and these underlying stocks, which is part of this portfolio, sits in your demat account. So what happens is that on an ongoing basis, the manager actually regularly updates this portfolio basis the underlying investment thesis of the portfolio, and you get these updates, and you need to see, just do a one touch approval of these buy and sells in this underlying portfolio, and you stay invested in that portfolio. So what happens is that instead of you timing the market or trying to find those right stocks, you find the right theme, sector, strategies which you want to invest in on your broking platforms. And because these are managed portfolios, you are investing systematically and smartly, like you would have done in a mutual fund or a portfolio management services portfolio, where the managers manages the portfolio. So this curated portfolio is what we bring to the retail investors, and this is changing the way people invest on direct broking platforms. And because of this curated portfolio being available to retail investors, we see that in the long run, for the retail investors, ability to create systematic wealth on broking platforms become easier, because they don't need to look at underlying stock life cycle. They invest in portfolios which are managed in nature. So that's from a retail offering point of view. Now, but how do we open this offering into the market? So we take a B2B2C approach, so which means that we are business to consumer platform technology. what we do on one side on the B2B, we bring in advisors, or which I just talked about, wealth basket managers. These are SEBI licensed professionals who have the relevant license to create such portfolios on our business platform. So they come on our WealthDesk business platform. They onboard as an advisor or research analyst. They create these portfolios, and these portfolios could be depending on their investment strategy around smart beta, factor investing, dividend portfolios, thematic portfolios, sectoral portfolios, whatever their investment strategy, they can create these portfolios. And on the consumer side, what we do, we go to every broker in the country and integrate with their broking channel, or with their broking platform, so that on the same broking app which the customer is accessing from a broking point of view, they can discover these curated portfolios and invest in these portfolios and manage these portfolios directly in their broking app. So what we have been able to achieve now is that we are on the manufacturing side of portfolios, we have got these incredible fund portfolio managers on our business platform. And on the consumer side, we have integrated with every broker in the country, so that these brokers on their same channels, they can actually open advisory based portfolios or research based portfolios directly to the retail investors. So that's our B2B2C strategy. So our growth focus is that we bring in more and more advisors to create portfolios, and on the broking side, integrate with every broker. And accordingly, so our vision now is something like, on top of broking and transaction platform, we have sort of become a unified wealth interface. So we are we are a platform neutral layer which enable portfolio creation on our platform and make that discoverable and transactionable on the broking platforms. So that's our offering in the B2B2C segment.
Well, that sounds really interesting. Now, I'm a little curious about what kind of challenges do you face when you are trying to solve for B2B partners like brokers and advisors or research analysts, and for also for the B2C end users, and how do you solve them?
So challenges on the advisor front has always been around. Let's say, for example, there was a, like when we launched our product in 2018-19. So our first actually partnership we did with a broker only, because they already had a research arm which can create portfolios and they can distribute through their broking customers. So the biggest challenges came in initially was that because brokers were not prepared to open their trading infrastructure to third party platforms like ours. So we are an investment technology platform that sits on top of broking platform. So how do you open the broking channel? Like how payment gateways have opened banks, right? Or UPI interface has opened payment channels from which is sitting inside the bank. So that open architecture was not there with the brokers. So it took us several years to make these brokers come to a situation where they can open their trading engine to us, so that we can integrate with their same trading systems, so that their customers follow the same experience what they would do when they invest through their broking app. So that was one big challenge which was technological in nature. So that's one thing. The second thing on the advisory front, because we wanted to bring in some of the best fund managers in the country to retail investors. Now, these fund managers or advisors were focusing on ultra HNI or very high net worth clients, and where minimum ticket size could be 50 lakhs, 1 crore or more. And when we told them that now you can put in your same research or advisory into practice for retail investors through wealth baskets, this curated portfolio at a massive scale on top of broking platforms. Initially, they were had this challenge that whether, okay, does it make sense to go to retail investors or a mass market versus premium ultra HNI segment? It took them a while to understand that time has come to move beyond working for a very defined set of customer base and building a business model versus going at scale to many retail investors and try to expand the market to bring in more curated or premium portfolios to larger retail community. And that is not plug and play for them, because they come in, they create portfolios, and they have a massive distribution on the broking side, where they can, anybody who has a demat account can invest in their portfolios. So it took them some time, but once they realized now some of the top fund managers in the country are getting into advisory based wealth baskets or portfolio investing on top of broking. And that's a great change, because at the end of the day, final winner is the end customer, who actually now gets to access premium portfolios or portfolios which he could not get access in the past on top of broking, and that they can simply invest in this portfolio and have these underlying constituents as part of the portfolio in their own demat account. So it's a biggest win for the end customer. Now coming to the end customer, as I told you in the last conversation we had on the wellness vision, is that that retail investors are really still wary of how they invest in markets. If you see the total demat accounts in the country, it has gone very aggressively, like especially in the last 2 3 years. But if you see the number of active investors on top of these demat accounts, for example, in the past, let's say we had 4 crore demat accounts. Now it is the demat accounts have crossed, I think, 8 9 crores. The active investors are very less. Let's say almost 25% of 4 crore were used to invest at least once in a year. Why that used to happen? Because when people start investing in direct stocks or ETF, especially on a broking platform, they eventually end up having losses. And when they end up having losses, their account gets dormant, and they tend to believe that equity market is not for them. But now there are two green shoots that are happening. One is that number of broking accounts are increasing, and if these customers invest in these curated portfolios, they will actually make systematic wealth, and which means that they will understand the power of equity investments, because they're investing in a wiser, smarter portfolios created by managers. That would mean these accounts would not go dormant, and at the end of the day, these retail investors will systematically make money in the long run through these smart portfolios. So that's the value add for the end customer. Their challenges are solved by bringing curated wealth baskets on broking.
That sounds really great. Now, can you please give me some insight into the core technology that is powering this platform?
Yeah, so it's a very deep tech product, because you see, we in the entire investment technology value chain, that right from somebody having their research practice or advisory practice, they are able to put that into a practice by creating these model portfolios called wealth baskets. So that happens on our wellness business platform. Then they productize it into a product where it is comparable to benchmarks, indices, which is a very much needed from in investment products, where you need to benchmark it with the right sources. So they can do that and then make it distribution ready and make it easily available on different broking platforms where Welldesk consumer is running, so that it can be discovered by the retail investor. And then from a retail investor point of view, they can invest, execute it through their broking engine into the exchange, track the entire portfolio on a real time basis on the consumer platform, and gradually get updates on their portfolios from the managers whenever there's a change in the portfolio. So you see the entire value chain from manufacturing to productization to making it distribution ready and executing it finally in the retail account, and providing them the post execution, the entire life cycle of managing that portfolio. This entire value chain is a very deep tech problem and is a very distributed problem, because there's one side advisor running is onboarded on Welldesk, and then execution happening at the exchange level. So this entire value chain is powered by Welldesk. So the core technology is very cutting edge, and it took several years to even get the first product rollout, which we started our engineering back in 2016. We got our first product rollout in 2018. Imagine, we took so much time to build this massive technology infrastructure. So underlying tech is very cutting edge. It is, we heavily rely on cloud, so we are cloud native platform. We run our entire product on Amazon Web Services for our partners. So because it's a distributed, we follow a very streaming based architecture, wherein the movement of information data is very distributed in nature across the entire value chain. The underlying product, which is the ability to replicate portfolio in client account, the underlying algorithms are very complex. So overall, the tech is heavily built on cloud, which means that it can auto scale, and we really smartly use cloud infrastructure, so that as our partnerships with many brokers expand from uh, to millions of customers, the platform can scale on its own, and can have almost zero downtime over any time in the future, even as the platform scale. So we have built this platform to achieve that scalability, and the underlying core tech is a very I would say computer science led, very like technology led product that has been built over years, so that eventually the core moat will still be the IP of the company, will still be the platform technology that we've built. And that is why our partners who actually onboard on this platform, whether as a broker or as an advisor, they really see the value of how like how their expertise of, let's say, as an advisor, where they bring in portfolios, or the broker who bring in the execution technology, when marriages with wellness technology, they see that this augmentation of wellness platform on their ecosystem actually makes them bring in advisory based solutions to retail investors in a plug and play model. And this is only possible because of the way we have architected our platform. And we are a true blue SaaS platform. So in the B2B2C model, which means that when we onboard a broker on our platform and we integrate with their trading infrastructure, we run a single tenant SaaS platform for their premise on their for their for their broking app. And these all can be launched on the cloud in a very seamless way by in a in, with a turnaround where, as a SaaS platform, I can add as many brokers as possible very quickly. Similarly, on the advisors, we are like a Shopify technology where they come, they create portfolios, and immediately their consumer offering is out to the retail investor. So all that is the core strength has been the underlying core technology that we have built, and that is why some of the best engineers in the country actually are joining our engineering team, and they are able to push the limits of how we innovate on the core technology.
Well, it sounds like you people are doing a great job. Now, please explain to me what are some of the key future plans that you have for this company and what is next for the business.
So we are a B2B2C platform, right from portfolio creation to distribution. So underlying assets that a manager can use to create these portfolios are equities and ETFs. So we are looking to bring in other asset classes around fixed income and other areas of other asset classes on our platform, so that wealth baskets on other asset classes can be created on our platform. So that's what we call as our horizontal expansion plan. And then on the consumer side, today customers on broking platforms can discover these portfolios and invest in these portfolios. So we have also launched something called on our consumer platform, we are launching other wealth management solutions, such as ability to optimize your existing portfolio. For example, on our wellness consumer platforms on brokers, what we have come up with a solution called that you come with your existing investments and see where your portfolio lies, the strength and weakness, and gradually help you to improve your portfolio and get into managed portfolios. So that is called portfolio optimizer. So we went live with that. We are also trying to bring in a very intuitive discovery of starting with stock research of how you look at individual stocks in different areas which you like, and eventually try to create a more smart efficient portfolio through wealth baskets if you want to invest in that stock. So that kind of offering we are coming on consumer side. So that's part of our vertical expansion on the consumer platform. So this is what we have continued to build on our entire in this entire platform technology value chain. The other is we recently launched something called as embedded wellness gateway. So what does is that, see, we already integrated with every most of the brokers in the country, which means that if my entire integration with the broker that I've done, like where you can go log in and invest in any stock and ETF that is there on the exchange through that integration, we have abstracted that into a something called as a software development kit, SDK, called embedded wellness gateway. Now this SDK can be embedded into any consumer platform on the internet. For example, recently we went live with CNBC. So on a news site, you can go look at stock research, and there, through embedded wellness gateway, on the same news article where you are talking about a specific stock or a research or a well basket research, you at the same site itself you can log in with your broker and transact into that portfolio or the stock through embedded wellness gateway through any of the broker which is there on our platform. So you see, just like how payment gateways sort of commoditized payment infrastructure on any consumer platforms for movement of money or for e-commerce, what we are trying to do is on securities transaction, which is on stocks, ETFs, and other asset classes on our embedded wellness gateway. We this whole execution infrastructure is available on any consumer internet property, so that we expand the market of investing beyond the brokers and traditional wealth management apps to more consumer platforms. And this is a very interesting use case because we are talking about embedded financial services, which is very contextual in nature. For example, in specific context, when you go, let's say, on e-commerce platforms, you tend to uh, get a lot of these on-demand credit cards. For example, like on an Amazon, you can get an on-demand credit from, let's say, an ICICI. Now that's a contextual use case because where you need money, somebody's giving you a credit. Similarly, buy now, pay later, or in of your travel insurance at that place itself. So this has been possible because somebody has opened up their architecture of insurance, credit, and lending into these e-commerce platforms. Imagine the same kind of contextual use cases on investing side, where you're reading about some particular stocks, news, or going through a research report which impacts your portfolio. Then and there itself, you are able to make changes in your portfolio. So those kind of contextual use cases are being created using embedded WealthDesk Gateway. So we are very bullish on that, which means that we have achieved internet scale in terms of platform technology to drive capital market penetration in India. So that's another area we are heavily focusing on.
Thanks, Ujjwal, for explaining it so well. Now, lastly, I want to ask you how technology is going to help democratize wealth management in India. What is your opinion?
So I think one of the biggest outcome of technology-led disruption in wealth management is that it brings us the a retail investor with a very small investment size to an ultra HNI investor with a larger ticket size at same level when it comes to experience. Because when a piece of a platform is open to an investor, whether you are somebody with a 5 crore investment or somebody with the 1,000 or 5,000 rupees investment, you get the same experience. For example, on some broking platforms, we have customers with investment size of portfolios with investment size of 1,000 rupees, while on some other platform we have portfolios which have investment size of 10 lakh, 20 lakh, 50 lakhs. But from an experience point of view, both the investors are getting the same experience. So that sort of bring them at par. It's only the portfolios or the solutions are different for different market segments depending on their appetite and risk capability. So technology at least make sure that when it comes to experience and when it comes to your the entire investment journey, you are at a retail investor with smaller ticket size or an ultra HNI with higher ticket size, they are at the same level. And technology plays that equilibrium. So that's one thing. The other thing is that, as I told you in the previous conversation also, that it is a time has come that some of the most premium wealth solutions, which was meant for ultra HNIs or investors with big ticket size, it is now gradually made available to larger investment community because platform technologies like ours are able to make that possible. That as you expand your reach on the distribution side, even a guy, even a manager who actually focuses on providing wealth solutions or wealth management to a big ticket guy now is ready to come onto the platform and make it available to larger community because he or she thinks that I'm able to reach a larger market. So if I reduce my service cost or my fee, then I'm not losing out on my business because I'm still expanding the market. My volumes are rising, and the platform technologies, because the might of distribution that can be available through platform technology like ours is so high that accessibility to premium stuff to the larger retail community is happening. So that's again democratization of wealth management because of technology. And the lastly, especially in capital markets, as India expands the broking accounts, like we see as 200 more than 200 million people, let's say possibly in future get have broking accounts. Now it is not easy to invest in direct stocks. People get intimidated. People think that it is not easy to invest, find the right stock and invest, and they're scared about it getting into equities. But equities is a great way to make money in the long run, to create wealth in the long run. Now, because of technology, curated portfolios are empowering retail investors to get into managed portfolios, and they are able to confidently invest in equities. So, which means that as number of broking accounts increase, the ability to create wealth from the savings money that people make in India over a period, that will culminate into more wealth because of right investment and smarter investments, and that will help them to compound. So that's again democratization of bringing capital market participation at a retail level. So that's again led by technology only.
Well, that sounds amazing. I'm sure this is definitely going to help all of our listeners too. Thank you, Ujjwal, for joining us today. It has been great talking to you, and I wish you all the best for the future.
Same here, Satavisa. I mean, it was really nice, talking to your listeners.
Thank you.